Legends, welcome. Yeah, let me get my screen going. Hope you're well. If you're here for the first time, thanks for joining me. This is the Daily Bias Show where we go through all markets as they relate to crypto. We deep dive various charts, get a read on the day, go through Bitcoin structure, go through the crypto, everything you need to know in crypto for the day, for the week. I'm here every day at the Bitcoin close. So thanks for joining me. It is the 10th of December. Well, it's Wednesday, the 10th of December where I am, down here in Australia. It's probably still Tuesday for wherever you are. Now, tomorrow, FOMC day. And the theme has been over the past, well, pretty much over the past 2 weeks now, that we're in the volatility window. Okay, if you've been keeping up with me on X, if you've been reading my Substack that I put out for free every week, we're heading into the meat of the macro calendar for the month, right? And for the end of the year. A lot of the market's expecting Santa Claus rally, and there's a case for it, right? There's seasonality, there is liquidity catalysts that we've been talking about over and over again. In my opinion, those are short-term liquidity catalysts, right? But we're in the meat of the macro month, let's call it. So this is the meat week, right? We're going to get a lot of directional guidance by the end of this week, okay? And the key focus right now is FOMC, which for me is tomorrow morning. For you is, well, it's still almost 24 hours away, wherever you are. I get confused with the times, right? But for me, that's tomorrow morning, FOMC. And I created just this quick table overview of my views and my thinking going into FOMC. Now, again, if you've been with me on this, on streams and on channel, there he is, legend. Richard, how you doing? So if you've been with me for the past days or even the past weeks, you know that my bias is macro bearish based on Bitcoin structure, historical price action signals, and basically because of some key signals that I track in Bitcoin, which indicates that the macro trend is bearish. We'll go over those in a moment, just as a refresher. However, these short-term liquidity catalysts could drive a counter-trend rally. And we're already seeing in some of Bitcoin's price action, some response to the speculation. Okay, now, where I say that I believe true direction is going to emerge within the next 1 to 2 weeks is because that's where we'll validate if the speculation can be confirmed, if these liquidity catalysts are going to come to fruition or not. And I believe FOMC is going to be one of those major volatility drivers where we'll be able to confirm or deny some of that speculation, especially when it comes to Powell's tone. We need to, that's what's going to be more important, right? Because if we look at market expectations, they've expected the cut now for a long time. So when you think about the whole pricing in and all that sort of stuff, well, if we've expected a cut for quite some time, then sure, maybe you'd say that that's priced in. But what is never really priced in is Powell's tone and his response. That's why you often see the most volatility come during and after the press conference. Okay, so the press conference is going to be key, and this table I created is basically just a summary of my thinking. Okay, so if we get a cut plus a dovish Powell, I'd say that leans bullish because the market's expecting looser liquidity, right? So that would be a scenario where we're leaning more bullish. Cut plus neutral, in my opinion, that doesn't signal extra easing. Okay, this, when I say neutral, I mean Powell is neutral. You know, he's not overly dovish, which usually relates to him creating looser conditions for liquidity, and he's not overly hawkish, which means that, you know, it makes the market think that he's going to be more tighten going to be tightening towards liquidity conditions, right? So if he's neutral, there's no extra easing signal and the liquidity picture is not improving. And to me, that's bearish because we're already on a volatile trajectory in a high rate environment where liquidity has been declining. So if he's neutral with a cut, that doesn't, in my opinion, give us much certainty of increased liquidity coming. So to me, that's bearish. If he's hawkish with a cut, obviously that's bearish. Now, I call these three the X factors, right? Because the market is usually pretty accurate. These CME probabilities are pretty accurate, and Jay Powell, whether strategically or otherwise, seems to be consistent with these probabilities, right? To not potentially not to upset the market too much. Who knows? But these three scenarios are then what I call the X factors, right? So these are the scenarios that the market isn't expecting or hasn't, call it, priced in, right? Because it's not a high probability. If a cut comes greater than expected, that would be the max bullish scenario, right? Because the market expects a 25 basis point cut. Okay, now if Powell comes in more aggressively, at least in the short term, that'll be interpreted as bullish, okay? Now, we'd have to be looking under the hood if that happened, because why is he coming in aggressive? Are there recession concerns? And we deep dive this view not too long ago in one of the streams where we talked about the DXY coming down doesn't always mean that risk markets are going to rally, because we got to understand why the DXY is coming down. And if it's because of loss of faith in the US economy or recession risk, then the DXY will come down while US risk markets or global risk markets even come down. So hence, a cut greater than expected, I say max bullish, but that is what I anticipate in the short term. That is the max bullish scenario. The market will respond to that very bullishly, okay? And then it will probably take at least a day, a few weeks for the market to potentially think, why is he coming in aggressively? Like those are the next questions we'll have to ask, right? A pause, not expected at this point in time. Very low probability of a pause that just snuck in, but that's a strong bearish signal, right? Because it just means to an already constrained liquidity environment, this is further constraint. It doesn't incentivize risk at all. And obviously if he hikes, that's going to be max bearish. We don't need to go into that. But hence my notes are, we got to come back to the fact that rates alone don't drive markets, okay? Because rates are just the price of money, okay? So it just is a way for the Fed, call it, to stimulate risk appetite. But if there is no risk appetite, or if there is concerns of recession, etc., doesn't matter how much you cut the rates, something else needs to be done, and that something else is usually QE and money printing, right? So hence, the biggest thing on watch this FOMC tomorrow is Fed's tone and his language, especially around the fact that they spoke about ending QT in December. Towards the end of this week, we'll get our next data read from the Fed to tell us what's actually happening in the balance sheet. Are they actually ending QT? Is the balance sheet flattening out? Or if you want to be bullish, is the balance sheet, are they doing some type of stealth QE where the balance sheet's increasing, right? We're not going to get that data for a couple more days. Hence, the market is going to be analyzing, just like I am, what Powell's tone will be, okay? So where does this leave us? Now, that's my read on FOMC going into it. But again, what do we say on this channel? 20% speculation, 80% confirmation, right? So we look for it in the data and the charts. So this is my 20% speculation, to be prepared for certain circumstances. What matters to me is what comes through to the charts. Now, by the end of this week, we will get more data that will fuel net liquidity. And remember, to be bullish, you need to be seeing net liquidity increasing, okay? So that's what we'll get towards the end of this week, right? Hence, we're staying patient here. We're staying patient in this volatility window because this week we'll have the main volatility driver being FOMC. But next week, we can't forget that we have Bank of Japan policy rate. Now, Ueda spoke yesterday, and my read on that was they're looking to hike rates, but they're also doing QE to offset the rate hike, right? So to me, I wrote some notes here just on my chart. All that means is uncertainty, right? Volatility. Okay, so that to me is still a bit of a concern, because hiking the rate makes capital more expensive or increases the value in the yen, let's call it. However, the QE is then devaluing the money supply. So it's got me scratching my head, really, like, because it's not a clear path. To me, it's still high caution, right? So it's not a clear path to liquidity expansion. So hence, that's still on watch to me. And what we're watching closely is the USD JPY, because basically the USD JPY is our tell, right? Is our, call it, if the speculations and the rate itself is that 20%, the USD JPY is the 80%, right? Because that tells us if the carry trade is getting unwound. Because if the USD stays strong against the JPY, it means that the money's not flowing back to Japan, flying out of risk. So hence, USD JPY is also on watch for us. So we're in the volatility window. We have to be patient here. We've got this week, we got to let that play out. In my approach, I'd rather let that play out, okay? Because Bitcoin is macro bearish, so I'm not eagerly jumping into positions on the long side, even if I do think there's a potential counter trend rally brewing, because counter is the key word there. It's counter trend. So in this environment, my confirmations have to come first. Hence, I'm waiting for this week to play out. I'll be waiting at the very least for the FOMC to play out before I participate in the markets in any meaningful way. So, quick scan around the grounds on some macro charts. The Dow and the SPX closed slightly bearish. And just the main thing I wanted to point out here, same running theme over the last streams, we're still in the cautionary zone, okay? Because remember, we discussed these bigger distributions, if it is a distribution, they play out over time. Now, the signal that put us in the cautionary zone was the fact that these daily structural lows were tested with the bands flipping. So hence, unless we get strong trending above, we've got to consider that these bigger distributions, if it is going to turn bearish, can take time. Okay, so hence these are still on watch. They're still on watch. The all three indices are kind of playing alike, the three major indices. Now the RTY, we're back at the highs. Okay, so this is our small caps index. So again, we got to be observing price action. Remember, I say observe price action at the extremes of the key levels, of the structure levels, because that's where the market shows its hand. Okay, so we're starting to sweep this level, but at this stage, we're still consolidating kind of right under it. Push above, sweeps, weekly sweeps would be a concern, right? Back below, and that's where the probability starts building that it could be distributing. So hence, we got these on watch, high time frame structures. So far, again, flashing some warning signs, but nothing confirmed yet, right? So bullish until proven otherwise. We just got those early caution signals that we need to be watching. Okay, obviously the Nikkei's on watch along with the USD JPY, and so far it's having a very strong bounce off this retest of the structure low, so no concerns there. jumping straight into our favorite crypto chart, USD, stablecoin dominance, which for me, I just use USDT plus USDC. Now, we've been up here at this major range high for almost a month now, okay? And I'll just highlight the main signal here is trending up, deep bear markets, altcoins get destroyed further, everything can go much lower. Just remember that, watch this chart, because if it starts trending up beyond this trend that we're going into that deep bear market, here's our play zone, okay? Here to potentially into the bands here. Okay, this is our counter trend rally zone, and if it's a bigger, stronger counter trend rally, we could come somewhere further down to here. But I just want to refresh you on what we've been talking about in the previous streams. Okay, the counter trend rally that happened in the bear market of 2022, it never reclaimed the bands to the downside and built new weekly structure to the downside with the bands flipping bearish again. So that's what's going to be watch if any bullish price action develops, which is fueling this counter trend rally. Okay, if it's going to follow through into something bigger than just a counter trend rally, we need to be watching these weekly bands and the weekly structure that develops. Okay, and if you're with me here on the channel, we'll be calling it out together. We won't miss it, right? So straight into crypto, let's go to Bitcoin. Now, I've already got this up on the chart, right? I talked through this yesterday. This is the major flip zone. So just to refresh everyone, my bias, we are bearish on the weekly time frame, okay? Which is, to me, for the macro cycle, the weekly is the macro cycle time frame, because you can see historically, Bitcoin never flips weekly primary structure unless it's transitioning from bull market to bear market or bear market to bull market. You know, you see it here in the parabolic run right up into the distribution range here. Weekly structure stays intact until it's ready to show concerns of breaking down. Then we had this giant distribution range, you know, flipped to give us another run here, okay? Flipped again here to give us the bearish transition into the bear market. We also monitor that with the TT bands. I give away these bands for free. Just DM me on X if you want them. Bands have crossed, bands are red. So I won't go into anything more than that. I've done it plenty on previous streams to show why we're bearish, right? Those are the signals. Now, I called out yesterday on stream that this is my flip zone. This is my major flip zone, right? So if Bitcoin gets above this zone, right, with momentum, and it's fighting support, fails to break down further from this zone, and we're seeing a nice, you know, some type of nice signals to suggest that it wants to keep going higher. This is the flip zone where I'll start becoming bullish, okay? And the context for that is based on, if you just think about those signals I just gave you, right? When weekly structure flips along with the bands, well, another key signal I look at is the most recent fair value gap, okay? The most recent weekly fair value gap in a bull market for Bitcoin does not get reversed unless order flow is shifting and the macro trend is shifting. So hence, if you look at the weekly fair value gap here, this is where it's shifted, okay, along with market structure, and now our third point of confirmation with the bands here. So hence, when I look at this flip zone, we've created our first bearish weekly order flow gap, okay, so that's where the zone starts. Then we come into the bands, right? Okay, and I'm expecting band resistance. Hence, if we're flipping the bands, that could be us flipping the bands to turn bullish again, right? That's what we got to consider, because price above the bands for a period of time will flip the bands bullish. Price below the bands flips the bands bearish, right? And then the third point of confluence there is we've got our daily structure high. So if we come down to the daily structure, this is what the primary structure looks like. So to be bullish on the daily, we need to flip the daily high. So if you take those 3 points of confluence, we've got our bands, we've got our weekly order flow, and we've also got a lower time frame structure in the daily starting to flip. So that's how I come up with this flip zone here, meaning I will start shifting my bias. But again, it all depends on how price action develops into this zone, because here's the paradox of trading, right? This flip zone is also my short zone. So if we're reclaiming the zone and I'm seeing signs of strength, then I'll flip to become bullish. But if we're struggling into the zone, we're losing momentum, failing to reclaim, then I'll be looking for my macro short for the bearish continuation down to here, potentially down to here, from within this zone somewhere. So hence, there's the fun of trading, right? But again, as long as you guys are with me, I'll be calling it out as I go. I'll be laying out what I see, hopefully so that you guys can learn and you know, maybe take something from this and incorporate into your own analysis some way, shape or form. Or you could provide some feedback to me to maybe I'm missing something that you're seeing. So, you know, so hence that's how I'm looking at Bitcoin right now. Okay. Now, there is another scenario to become bullish. Okay. And this is one that I've laid out many times before. And it's where Bitcoin flips weekly market structure. So right now, if the market structure for the weekly is like this, okay, it means that as price moves like this, right? This is how it moves in a bearish trend. So to flip to bullish, you need to invert the last lower high, okay? Because then bullish, right? And that's what a transition looks like. So hence, when we look at weekly structure here, this is the last high that was created, the weekly high, before structure turned bullish. So the other way that I would become bullish again in for Bitcoin is if we come up, okay, potentially, who knows, maybe this is it here for the move, okay, and then we come back down, creating a weak low, okay, maybe it SFPs on the weekly, maybe it's a slight deviation, sweeps this low, okay, but what this move does is once this new low is created, it validates this high as the new lower high, okay, so then this primary level comes down here and I can be bullish again if Bitcoin reclaims here with strength. Now, if it does this, would I just be jumping into long this thing here? No, right? Again, thinking about how market moves, if it's then going to move bullish, right, and it flips this level, how does the price move to be bullish? Well, high lows and high highs like this, right? So I'd be waiting for this to come back down. And now why this is a critical signal is this point here is ultimately going to tell us is if this was a deviation and we're just continuing lower. I'm sure many of you, like I have been, trapped here before. Hence, that's why I don't want to be longing through here. I want to wait for this pullback here, and then I want to be analyzing price here, okay, for my signals. Usually that's when I'll jump to the lower time frame. So if this is the weekly, okay, I might be then jumping down to the daily and the 4 hour on this, and I want to see that pivot occur, and then that's where I'll be looking to participate in this, right, through here to go long, back targeting up into the structure shift. So hence how that translates into Bitcoin's price if we do get the weekly shift in this way, okay, when the structure comes down and shifts, I'd be waiting for, whether this comes up here, wherever it is, I'd be waiting for this move, however deep it goes, right? I'd be waiting for this move. So this section is the no-go zone, okay? This section is the move that I'd be analyzing to participate to get long again. Because you got to remember, right? If you're just longing this section, like even if it comes right back up here, okay, so to me, my old new trader psychology would be saying, oh, I'm missing the move, right? But today's trader, right, that my new psychology tells me, well, hold on, that's just a stronger impulse, which gives me more probability that it wants to keep going higher. So hence, I'm more confident longing the pullback, right? Whereas if I just long this thing, straight out the gate here because I don't want to miss it like going higher. Well, if it stops somewhere here, that's technically a weaker move, right? So there's probably more risk to it heading back this way. So hence, that's why it's so important, even when this shift happens, that for me in my system, when I see these shifts in market structure, this first move from where it shifted to where it stops, that's the no-go zone for me on the way up, okay? So then I need to wait for at least 2 candles in the inverse direction before I can start participating, okay? And then that validates the pullback for me, and that validates me to start looking to get involved, right? Because hence I want to be in the pullback to head back up that way. Okay, so that's the flip side of if we were to invert structure, or that's the second way that I could be bullish on Bitcoin. So right now it's basically reclaim the flip zone and or shift the weekly structure. Okay, that's how I would be bullish on Bitcoin. Now, before we wrap up, the last thing we'll do, just to come back to the volatility zone as it relates to price action right now. When you get good at reading price action, you can see the volatility in the charts, and it connects the macro and the liquidity into one picture in the chart, right? Pretty much from here, I've been saying, hey, we're entering the volatility window, and you can see the volatility here, right? Outside bar, that's a volatility candle. Inside bar, compression, right? So the market, the buyers and sellers are battling it out for who's going to take control, like which direction. Okay, price action tells you the story. Then we had the outside bar, which is both sides trying to take control but failure to follow through, right? More volatility. Now, if you remember what I said in the last few streams, I said, given the context of an inside bar, then an outside bar, the outside bar is the indecision candle. And when we see the outside bars, we got to pay attention to the extremes of the candle. Price action will usually start telling you the story around the extremes of the candle. If now coming into, just as literally the day before, we're about to come into FOMC, which is the key volatility driver event, we got to be watching how we react here, okay? So if this weekly candle ends up closing the week as a sweep of last week's outside bar, well then it's that is a bearish signal, right? And there's a higher probability that price wants to go lower, at least down to here, maybe down to here. And given that we're macro bearish and given the broader context, that could be the formation of our next pivot to at least come down and create a new low here. Okay, so that's what we got to be considerate of. Now, by the end of the week, if we just have a strong bullish close above this last week's high, that would show us the market's intent that it's potentially wanting to lean further bullish. Hence, I hope this shows you guys how you can see this. When you learn to read price action, you can read the story and the volatility and how the market's digesting the broader macro and everything else in the chart itself. And when you can tie the two things together, when you can bring the macro, the liquidity in to gauge environment and context, and then see the price action to either confirm the story that you are seeing in the macro or deny it or reject it, you know, that's where I've personally found I can create my best trades, my bigger trades. Okay, so that's what's on watch right now, legends. We've got FOMC tomorrow as we're into this key level that we've been talking about, the extreme. And if we see this weekly candle close bullish above last week's high here, okay, we'll assess it as we go. Like I said, I'm here every day, so you guys will know what I'm seeing and what I'm thinking. If I see a strong bullish close above this candle, then I'm more incentivized to start participating in the counter trend rallies, because I think we could be heading potentially higher, right? At least into the end of the year, okay? But Let's not speculate too much. Let's analyze price action as it develops. And like I said, I'll be here daily to call it as I see it and update you as we go. That's it for today's stream, legends. Richard, I appreciate you. I'll catch you soon, Ledge. Hope you're well. As always, please like, follow, subscribe. Find me on X. I post on X regularly and I'm active there. If you want any of the indicators that I use, net liquidity, TT bands, or my token rotation indicator, I give them away for free. Just DM me on X. Otherwise, I will catch you guys on the next one tomorrow. Cheers, legends.